We're seeing Bitcoin right now around 28,000. You note that the price might be driven because of consumer insecurities in the U.S., revolving around the banking sector and the tech sector. Explain that. Why are people flocking to Bitcoin at this time of uncertainty when it's such a volatile asset?
Thanks so much for having me on today. And in terms of how we're thinking about the markets, a lot of, I think, the driven pricing right now in Bitcoin was very much spiked with over the past month with what was going on with Signature Bank, SVB, and Silverlight. We kind of really noticed that in terms of essentially that as things calm down in the markets with the FDIC stepping in and securing deposits, that we kind of saw a pullback effect in DeFi as regulators and then also what was going on, essentially regulators such as the CFTC is also beginning to crack down on exchanges such as Binance. And also, as we saw yesterday, that Pactful was also suspending operations, again, due to increased regulations in the market. So we're very much seeing that as U.S. markets and U.S. banking continues to kind of show strong hold in terms of centralized banking processes. Bitcoin had a shoot up through the roof when we had a lot of turmoil, and then we're seeing it kind of come back to a more steady state around 28K.
Yeah, I saw your cat walk in and then walk out of the room. That's kind of what you're saying Bitcoin is doing. It sort of, it poked its head in and said, nope, this isn't right, coming back down, correct? It's sort of like your cat, which was adorable, by the way.
Oh, thank you. Yes, it's very much like you said, it's something that as we continue to kind of see regulation coming into the crypto markets, what I'm expecting, and I think what a lot of more steady, stable investors are expecting, is that we'll see more activity coming in. But right now, in terms of how crypto is viewed from a financial advisory standpoint, or even from a average consumer standpoint, it's speculative, but it's something that many people, it's a good way or a good opportunity to kind of diversify your investments if you're willing to kind of take on that risk.
Earlier we mentioned that Ethereum is hitting a 9-month high, and the Ethereum Shapella hard fork is slated to happen in 8 days and will let users withdraw their staked Ether. Do you have a familiarity of what's going on with the price of Ether?
Yes. So particularly my understanding of the situation is that this hard fork will allow people to withdraw from their validator balance into their Ethereum balance, which is great for increased liquidity across the market and accessibility for those that trade in staked Ether. And one thing that we can probably expect from that is a increase in activity across the chain when it comes to Ethereum. In short, essentially, when you have basically withdrawal validators in block processing can essentially bridge back to the validator Ether balances from essentially a beacon chain to an execution chain. There was a really cool article that was written by Off-Chain Labs, actually, that really explains more in detail the technical aspects of it. But all in all, this is an amazing opportunity for Ether, and even has kind of shown for its year-to-date high it's up 56.2%, that as we continue, essentially as it continues to become more liquid and more accessible, we'll probably be seeing a lot more of that asset being traded.
Mm-hmm. Also, looking at the Coindesk Market Index, the DeFi sector leads among sectors this week, as several tokens in the sector are among the top performing in the CMI. Two examples are DEX Protocol Injective, which is up over 56%, and DeFi Protocol Coin98 is up over 32%, which recently launched a liquid staking partnership with Anchor ahead of the Shanghai upgrade. What is your outlook for DeFi, and what accounts for this surge? Is it because of the troubles with CeFi, with centralized exchanges and the banking collapse?
So I think that I'm thinking more so in the short term, DeFi might be performing very well, but market stability and regulation is going to help DeFi over the long term when it comes to performance month to month and also year over year. Regulators essentially have allowed crypto to run amok in many ways for years with little oversight. We're seeing a lot of regulation happening on the state and local level. Illinois, for example, proposed their fintech digital asset bill. New York is providing further guidance guidance on cryptocurrency and custodial structures, that we're going to see a lot more viability within the DeFi space as this regulation starts to come in. I don't think that it's something that DeFi should be afraid of regulation, but in terms of how regulators and those that are in DeFi cryptocurrency stakeholders will collaborate with the industry, it is important for the continuance of DeFi in the long term that stakeholders and regulators work together in order to create a more cohesive environment for DeFi to operate.
All right. Victoria, thank you so much for your analysis. That was Banrion Capital Management Chief Investment Strategist Victoria Bills. Coming up,